Hey everyone, and welcome. Today, we're going to demystify the single biggest financial arena on the entire planet, the US stock market. We're going to break down what it is, why it matters so much, and what you really need to know. So, let's jump right in.
So first things first, why does the US market get all the attention? Well, to put it simply, when it comes to finance, it is the undisputed heavyweight champion of the world. I mean, its scale is honestly kind of hard to wrap your head around, so let's try to put it in perspective.
Okay, so get this. The entire global stock market is worth a mind-blowing $95 trillion. But here's the kicker. Just look at this chart. The US, all by itself, makes up more than half of that entire pie. It's not just a big market, it is the dominant force on the global stage.
And just to really nail this down, let's put an actual number to that. We're talking about more than $45 trillion. That's the value of the US market alone. It's a number so huge it's almost abstract, and it represents this massive concentration of capital from all over the world.
And look, this isn't just some abstract number floating around in cyberspace. We're talking about the companies that literally shape our day-to-day lives. I mean, think about it. Amazon, Google's parent company, Alphabet, Tesla, all of these titans of industry, these household names, they all call the US market home.
All right, so we've established the absolutely massive scale of the market. But what are we even talking about when we use a word like equities? Let's get back to basics for a second.
It's actually pretty simple. Equities is just a different word for stocks or shares. When you buy an equity, you're not just buying a blip on a computer screen, you're actually buying a small piece of the company itself. You literally become a part owner, and you have a real stake in its future.
And this is the really crucial part. Your investment is tied directly to how that company performs. So, when a company is crushing it and the market is feeling optimistic, what we call bullish, the value of your little piece of the company tends to go up. But, and this is a big but, the flip side is also true. If the company's performance is poor and the market gets pessimistic or bearish, the value of your shares can definitely fall. Okay, so now that we've got that covered, let's explore why so many investors from all over the globe are drawn specifically to US stocks. What is it that makes this market so attractive?
Well, this chart right here tells a really powerful story. On the left, you've got the combined value of just the two main US exchanges. That's the NYSE and the NASDAQ, and they top $30 trillion. Now compare that to another major global player, the London Stock Exchange, which sits at around $3.6 trillion. I mean, the difference in sheer financial power it's just staggering. And all of that size, all that money, it brings some really key advantages. First up, liquidity. That just means with so many people trading all the time, it's incredibly easy to buy and sell your shares when you want to. Second, capitalization. These companies are just often incredibly well-funded and financially strong. You also get amazing diversification opportunities across thousands of different companies. And finally, greater accessibility, which makes it one of the easiest markets for international investors to get into.
But, and you knew this was coming, right? It's not all sunshine and profits. To get the full picture, we've got to be real and talk about the other side of the coin. It is absolutely crucial for any investor to understand the risks involved.
And look, this is probably the single most important reality check. Profits are never, ever guaranteed. I'll say it again, never guaranteed. Even the biggest, most valuable, most successful companies in the world can see their stock prices go down. There is always risk involved when you invest, period.
Okay, so beyond that basic market risk, if you're an international investor, you might face a few other hurdles. For instance, you've got currency fees to think about when you're converting your money into US dollars. Trying to get deep market insight can also be a bit tougher from a distance. And finally, you just have to be prepared for inherent volatility. Those natural ups and downs are just part of the game in any market.
So after all that, where does this leave us? We've seen the incredible scale, the really clear advantages, and the very real risks. So what's the big takeaway here?
I think this one quote really just nails it. While profits are never a sure thing, what you can count on is that there is plenty of potential within the market. It's this incredible landscape of opportunity, but you have to go in with your eyes wide open to the risks.
And that's our deep dive for today. The world's biggest, most dynamic market is open for business, filled with both established giants and the next big innovators. So, after seeing the scale, the opportunities, and the risks, the only question left is, what's your next move?